Do you also think that money can be earned only by hard work? If it were so, then laborers would be the richest. This is not my opinion but Robert's opinion in the Rich Dad book. Robert says, why invest in assets? Not your salary can fulfill your needs, but your assets make you financially free. If you do not want to face financial problems in the future, then you will have to focus on creating such assets. But now the question arises that in which asset should money be invested among so many assets? Because in our India, people buy houses and gold in the name of assets, from which they do not even get enough returns to become immortal. Therefore, in today's video we will talk about 6 such rich assets that can make you rich. If you invest properly in these assets, then you can secure your financial future. If you want to invest in real estate, but you don't have crores of rupees, then REITs is a great option for you. REITs Real Estate Investment Trust is a company that gives you the opportunity to invest in real estate properties, that too without the hassle of buying property yourself. They work like mutual funds, but here the money is invested in residential, commercial and industrial properties like malls, hotels, offices, buildings, warehouses. In REITs, many investors come together and buy properties from a pooled fund, which gives rental income. 90% of this rental income is received by the investors in the form of dividend. So if you invest 10,000 in a trust, you indirectly become the owner of the property listed in the portfolio of that trust, and you get its share in the form of rental income and property appreciation. There are basically 3 types of trusts: equity trusts, mortgage trusts, hybrid trusts. Equity trusts are the most common trusts, which buy and manage properties and pay dividends from the rental income. Mortgage trusts invest in loans and mortgages and generate interest income, while hybrid trusts are a mix of both. It invests in both properties and loans. In India, you can invest in trusts through stock exchanges like S&P or BSE. You just have to buy shares from your stock account. The biggest advantage of trusts is that they are reliable. Every year you get dividends in the form of rental income, which can become a good income source. This is a low-cost investment. You can start investing in it from 10,000. There is a lot of liquidity in bonds, so you can sell your shares in the stock market anytime. Apart from this, there's also a lot of diversification in bonds, because the portfolio of a single bond contains many different types of properties, which reduce your risk, and the best thing is that bonds are also regulated inside the RBI. Due to this, there's more transparency and safety here. There are some tax benefits on dividends received from bonds, which increase your overall returns, but bonds also have some risk. Like the stock market, bonds also affect the price. Returns may decrease when interest rates increase. Rental income may also decrease due to economic downturn or property market collapse. Still, REITs are a good option for investors who want to invest in real estate. If you want long-term stability and constant returns, investing in infrastructure properties can be a smart choice for you. Infrastructure properties are essential in every economy, be it roads, airports or warehouses. If you invest in these properties, you are investing in sectors that will always be in demand, because all this is necessary for development and modernization. I know, what is going on in your mind? How will you invest in this? Because direct property purchase will be very costly for you. So here comes some options, like you can invest in infrastructure mutual funds, infrastructure needs and private equity funds. Those who invest directly in infrastructure projects, infrastructure assets, are quite stable because there is always demand for them. For example, if you are investing in a highway project, then you will get solid revenue from toll collection, or if you invest in warehouse space, then you will get regular rental income. Infrastructure projects get government support because they are connected to public interest. The value of infrastructure increases with time, especially if you invest in developments. Infrastructure properties work as a diversification tool. If you have a VTI, which is real estate assets already, then by investing in infrastructure you can increase your capital. It can diversify your portfolio or reduce your investment risk. If you are investing in physical infrastructure, location is very important, such as investing near expressways, metro stations, and industrial corridors, can be beneficial. Along with this, it is important to track the infrastructure development plans of the government. For example, creators looking for an ad which gets 50% off the word competition, such as National Infrastructure Pipeline app or Smart City projects. Infrastructure properties are long-term investments. In such a situation, if you want short-term profit, then this investment will not work for you, because this is an asset that shows its value with time. Then if you are investing in infrastructure, then you are putting your money in future-proof investments. Such assets are those which prove themselves with time, and provide you stable and growing returns. The demand for infrastructure properties never decreases, and it can prove to be helpful in giving you long-term financial security. Land investment is always considered a safe and reliable one even if the time changes. Land never loses its value. So if you want to become rich and are looking for such assets, which will give you good returns in the long term, then land will be the best for you. The value of land is never limited, it is fixed, but due to the increase in population, its demand is decreasing every day. So buying land at the right location can give you benefits in the future. There are some specific locations in India where land investment can be very profitable. Religious places Haridwar and Rishikesh are such locations where the coming of religious people and tourists will never stop, due to which you can get more appreciation here in the long term. Investing in developing cities can also be a good option for you, like satellite cities, cities into third cities. As these cities develop, their land value also increases. Prime urban locations like Delhi, NCR, Mumbai, Bengaluru provide good investment opportunities, because population growth and commercial development is happening in these cities. So if you buy land worth $1,000,000 today, then in the next 5 years the same land will become worth crores. While investing in land, you should pay attention to some things. First of all, location selection is important. You should choose such areas that can be expanded in the future. Land is a long-term investment, hence the best returns are obtained after 5 to 10 years. Along with this, it is also important to do legal duties like verifying the land title and ownership rights so that there are no legal issues. Land investment is also considerable. You can build a house on your land and give it away or sell it. If the land is not yet developed, you can use it for agriculture, gardening or commercial rentals. Investment in land is less, but still it is important to keep an eye on the market trends and location. If you invest in the wrong location, your land price will not increase. Land is a timeless asset, which can give secure and profitable returns. If you want to secure your future, investing in land can be the safest and most reliable decision. Dividend stocks, you must be wondering how this is set. So look, investing in stocks is different, and dividend stocks are different. Dividend stocks are such that help you generate income. These are those stocks in which a company has given a part of its profits to its shareholders in the form of dividend. If you have bought shares of a company which pays dividends every quarter, you will get a fixed amount at the end of the quarter, while the amount will depend on the number of shares. Suppose you have bought 100 shares of a company, and the company pays a dividend of 5 per share, then you will get a total of 500. Dividend stocks are basically those companies which have already established their position in the market. These companies distribute their profits to reward shareholders. The profit remains with the company for a long term. The advantage of dividend stocks is that they provide you with a regular income source. These stocks also have long-term growth potential, which is why the stock price of dividend-paying companies grows in the long term. Some popular companies in India pay dividends regularly, such as ITC Limited, HDFC Bank, Coal India, Bajaj Auto and Reliance Industries. While investing in dividend stocks, you should do a thorough financial analysis of the company. You should prefer those companies which are earning constant profits and whose debt level is low. It is also important to diversify your portfolio. If a stock underperforms, then stocks protect you from loss. Stocks take long-term wealth building, which can take you towards the goal of operational stability and financial freedom. If you are thinking that you can become a millionaire one day by investing in startups, then this is absolutely the right thinking. There is a high rate of return on investing in startups. You get money, but there is also risk when you invest in someone. Basically, you are buying their equity shares. If you are thinking that you can become a millionaire one day by investing in startups, then this is absolutely the right thinking. There is a high rate of return on investing in startups. You get money, but there is also risk when you invest in someone. Basically, you are buying their equity shares. If the startup is successful, the value of your shares increases and you get good returns. You can invest in many ways in the market. The first is investing. In this, we can directly give our money to those startups which are in the initial stage. There is a lot of risk in this type of investment, but if the startup is successful, then the return is also very good. The second way is Chakra Capital Points (VCF). In this, instead of investing directly in a startup, you invest in multiple startups. This option is for those people who do not want to get involved in direct investment. The third way is through crowdfunding platforms like analyst. You can invest in a startup by investing a little money. These platforms give you the opportunity to invest in a small amount. There is a direct link with the startup founders. If you want to invest in publicly stated startups, Then you can also invest through the stock market, like companies like Zomato or PetMe offer shares through their accounts. To invest in a startup, it is important to do research and understand the market trend. So if you are ready to take risks, then startup investment can be an exciting option. Forestry investment is a unique and eco-friendly investment option, which can give you good returns in the long term. There are two types of investments: direct line 25 and managed forestry projects and direct line chase. You buy your land and do plantation yourself. In this, you have to take the responsibility of plantation and maintenance yourself. In managed forestry projects, now invest through a professional company who do plantation and care on your behalf. This is a free option. Here you get professional support. Basically, teak, mahogany, bamboo, or sandalwood are grown in it. When these trees grow and their wood is cut and sold, then you get profit. This investment is usually made for 10 to 20 years, but the returns are quite attractive if kept patiently. It is an eco-friendly investment, which helps in protecting the environment, and you can also get additional income from carbon credits. This is an inflation-proof option because the price of wood of these trees increases with time. Investing in it is also quite simple. You have to select forest and plant saplings of high-quality trees. Then you have to do regular maintenance. When this address matures, you can sell the wood of those trees in the market and earn profit. Some risks are also involved in this investment, like lateral disasters, market fluctuations, and long-term lock-in period. That is why research and diversification are essential for investing in it. Forestry investment is a game of tuitions, but if the crowd grows big, there will be a rain of money. Along with the financial matter, this is also a good step for the environment. Friends, earning money is one thing, but to build real wealth, it is important to choose the right assets. These 6 assets will secure you not only for today, but also for the future. Remember guys, they are those which work for you. Invest smartly when you are sleeping or walking. Think long-term and change your journey from earning money to making money. If you like this video, click the like button, share, and subscribe this channel.